consumption, and the prudent regulatory bodies. And the savings rate currently in the U.S. are also lower than they've ever been, which also shows signs of monetary policy stimulating the economy and trust being brought back in the bank, in the financial market.
I'd like to add something to that. The opposition mentioned that working with the Basel Committee was not as effective as it seemed, as they had to only disclose how much capital they were required to hold. However, there is a minimum capital requirement that they need, and the Federal Reserve does look into that. And if the bank does not meet that requirement, they have up to 6 months to raise their capital, which reduces the liquidity problem that banks usually have, which cause them to go bankrupt.
We have a question now. So how about why don't you guys ask questions first?
Yes. Earlier, you noted that the injecting money into the economy does not spur economic growth. But how can you account for the signs of economic growth evident in the personal income, expenditure, and stock?
Can I interrupt for a second?
Yeah.
So, I know I'm not supposed to interrupt. This is I get one time per presentation. The title of this topic, the resolution is, are the present government policies creating the risk of another bubble? So the present economic policy creating the risk of another bubble. That's what we're supposed to be focused on. I'm getting worried that we're talking about fiscal and monetary policy, economic growth, health of the economy, and on and on and on and on. Does the present policy is it leading to another bubble? Is the present policy leading to another bubble? You people are arguing yes. Convinced? What are we now doing that's going to lead to another bubble?
Basically, the main three things that we're doing that are leading to another bubble are, first of all, we are going back on the emergency measures that we implemented after 2008. The main one being asking for increased transparency in banks. What we saw with the securitizations and the subprime market was that a lot of the problems that came out of that crisis was because investors didn't really know exactly what they were.
So your argument is the present policy, which isn't very transparent, is going to lead to another bubble.
We're going back to, yeah.
Okay.
So we're encouraging
Second argument?
securitization. So one is
So
less.
we still allow securitization, and that's going to lead to another bubble.
Yes.
Third argument? Is there a third argument? There's two. Okay. So that's why they argue that what we're doing now is going to, history repeats itself. The history repeats itself. And you're saying, no, it's not going to happen. Why? Why?
Well, first,
Two strong arguments why it's not going to happen.
Let's start with the second argument, that the current regulation taken by the Federal Reserve have implemented procedures to make sure that such a crisis doesn't happen again. They've enhanced their systematic risk evaluation, they've kept deposit insurances, and they've made sure there are reserve ratios for adequate capital, because liquidity was also an issue, and because of LLR, the lender of last
And they're
resort.
controlling riskier mortgages, right?
Yeah,
And they've introduced regulations to the derivatives market, like the 5% risk repayment.
Okay.
and also in the event of another crisis.
So you're arguing that positive, real, practical steps have been taken to avoid another bubble.
And also to contain the occurrence of another bubble.
Okay, and
This
what
is
about their transparency argument?
Well,
Your
including
first argument was transparency. wasn't
Yeah,
it?
basically when we're not going back on the new measures, we have no way of enforcing them, either because
Well, we'd say included in the Dodd-Frank Act, there was a significant amount of transparency and accountability in terms of financial institutions, where now they have to demonstrate their risk has to be.
What controls have been implemented to prevent the too big to fail problem?
Regulation.
Because
Well,
what the papers are saying is we're back to where we were in 2007. We've got all kinds, Goldman Sachs, et cetera. They're back to where they were. They've paid off all the bailout debt. They're paying huge multi-million-dollar bonuses, and we're just playing the same game over again, and we're running the same risk of a collapse. I'm not sure if a collapse is the same as a bubble, but
what we would argue is that while some of the practices are the same, the risk has been significantly lowered due to regulations such as the risk retainment. There's Transparency and Accountability Act in 2010, which forces financial institutions that swap derivatives to be registered, monitored, and report all their trades, as well as the minimum capital requirements, which was one of the problems when the 2008 crisis happened, when AIG didn't have enough capital reserves.
It's also important to note that in the event of another crisis, I mean, we have to look at the crisis as a mistake that the Federal Reserve have now observed and suffered. And there's trust in the system that's reflected in how high consumption has been in the United States and how much growth has increased. But going back to the point that in the event of a crisis that's
irrational
happened,
exuberance.
in the event of another crisis, there are procedures implemented to contain the crisis. There's the LLR, which has enhanced an opportunity for for the Federal Reserve to collect information, consistent information, internationally and domestic, so that they could at least lower the severity of another crisis, so that we don't see a recession as low as we did in 2008. So even in the event of a crisis, the implemented procedures currently happen will reduce that severity of harm.
Right. Okay, questions from the judging panel? Or Albert, do you have any questions?
Yes, mostly for the tourism side. When you mentioned that the savings rate is lower than ever, how exactly do you think that's a spectacularly good piece of data?
Well, first off, we have to look at what happened at the start of the recession. The savings rate skyrocketed, which can sort of show, I guess, a lack of trust in the system. People did not want to be investing. People did not want to be consuming money because they did not trust the economy at the time. They didn't want to go buy a stock and lose all their money. But we have seen the savings rate steadily decrease since then. Now, obviously, we don't want to encourage ridiculous amounts of spending, and that's through regulations and mortgages, only allowing people that can afford mortgages to get them. But essentially, when you're not saving, you're spending. And so this has shown a good increase, but it's also shown a stable increase in spending.
Let me put it this way. Just before the crisis, I think there was actually a moment where the marginal propensity to consume in the States went above 1. People were, like, for every dollar they earned, people were spending $1.10 for a short period of time. Don't you think that returning to this kind of, again, irrational exuberance is just putting us again on the track towards the next bubble?
Well, the thing is, we're not sort of encouraging irrational exuberance. We're encouraging spending, but moderate spending. And that's through things such as regulations and mortgages, loan requirements, things like that. So obviously we don't want to encourage irrational exuberance and people spending every single dollar that they earn immediately. But we do want to encourage the economy to recover. And to do that, people have to spend money. So to a certain extent, we want to encourage people to spend money.
Is there any, are there any long-term plans? Do you know if they have reduced the interest rates, but do they have a time frame on it?
Yeah, the tapering actually has already started
That's what
on
you mentioned.
quantitative easing. And quantitative easing 3 should be done by December. And once that happens, interest rates should be rising and obviously controlling spending and borrowing within the economy.
55 billion a month now.
Yeah.
Can I have another question for the pro?
Should put it to Ying. She hasn't heard from her yet. She's fallen asleep there.
All right. So this massive expansionary monetary policy by the Fed seems to be showing some results. What are your criticisms of it? Do you think was it the right choice? Does it have any long-term consequences? What do you think is there a downside to it, or did it work as perfectly as the downside seems to suggest?
Within the monetary policy of the US federal government, they just like printing money, and that causes a decrease of the value of the money. And also, they really should like increase the debt ceiling in order to, because roughly 40 to 60% of the international financial transactions are take place in dollars. And U.S. Treasuries has continuously losing their value.
Professor Moncrief.
I have no questions.
I have no questions either. No.
Do you have questions for each other? Is there something that
No, I
we
think we
can?
have to call it.
Oh, what if it's on?
I don't.
Last minute? 1 minute?
No, it's okay.
Yeah. I thought I was.
If I had to vote, I couldn't. It's kind of soft. The problem I've got with this resolution, I think I mentioned this before you started, was it was so broad, right? Didn't I mention that? I think I did. If I didn't, I mentioned it now. It's sort of like saying, are we doing the right thing right now? And who knows? I mean, there's so many elements to argue. You could argue until you're blue in the face, right? You're basically covering the whole of economic policy, and you're saying, is everything we're doing right? And you're saying yes, and you're saying no. That's the problem I've got with this debate. Yeah, you're saying no. I was trying to focus you on is it going to create a bubble, but then it seemed like a lot of the argument was whether or not it was a viable monetary and fiscal policy. That's just my own sort of problem or difficulty in judging it. So I don't know whether to agree with the no's or the yes. Roy, Albert?
Just based on the arguments I've heard, I'd have to give to Charles. I think the
I mean, the
arguments.
affirmative side is like a gender neutral.
Oh, since we're PC now, yes, I'd give it to the affirmative side. I think your arguments were marginally better. And yeah, a lot of the arguments from the opposing side kind of had significant holes in them. Especially, like one thing that stood out to me was, so they increased the reserve ratio by what? If they increased it by 0.1%, like it's not a significant change at all. A lot of their arguments seemed kind of stretching the.
The Canadian government or the Bank of Canada doesn't increase the reserve ratio anymore.
Well, they're talking about the United States, but.
Okay, well, anyway. It was a good presentation. It was pretty broad. It was pretty hard to nail it down. See, this is a good lesson to learn, actually. When you're writing a paper, the narrower the paper is, the better it is. It's interesting. You pick a really narrow topic, it turns out to be very broad. I mean, you've got more to write about than you would expect. So it's just a trick of the trade, right? When you're writing your PhD thesis, which I'm sure all of you